Hello, everybody. My name is Peter Coy. I'm the president of the New York Financial Writers Association, and I'm happy to invite you or to welcome you to this session, The Midterms, Wall Street and the White House. This session was put together by Myron Kandel, who is one of our most loyal and longest serving members. He was president of the New York Financial Writers in 86, 87. And he has an extremely long and distinguished career in financial journalism. He was one of the founders of CNN, served as its financial editor and economics commentator for 25 years. In 2000, he was named one of the 10 most influential financial journalists of the 20th century. Started his journalism career as a copy boy for the New York Times, working nights while completing his senior year at Brooklyn College. He earned a master's degree from the Columbia University Graduate School of Journalism and subsequently taught journalism there and at City College. He served as a financial editor of 3 newspapers, the Washington Star, New York Herald Tribune, and the New York Post. He was also a foreign correspondent for the Herald Tribune, a reporter for the New York Times, and the editor of the New York Law Journal. Following his retirement from CNN in 2005, he served as the founder and president of the New Hampshire-based Initiative for Corporate Responsibility and Investor Protection. He's been the president of 5 journalism groups. In addition to the New York Financial Writers, they include the Society of American Business Editors and Writers. He's also gotten 4 doctorate degrees, honorary doctorate degrees. So just an amazingly distinguished person, and we're so glad that he has maintained his association with the financial writers all these years. And we just thought one way to honor him would be to invite him to put together this panel. So the topic and the panels were entirely Myron's idea. And at this stage, I'll stop talking and I'll turn it over to him. Thank you very much, Myron.
Well, Peter, thank you very much for those nice words. What's interesting is when Peter and I first discussed this subject about 6 months ago, it seemed pretty obvious what the midterms would bring. A sweeping Republican takeover of the Senate and the House. Well, that doesn't look exactly true anymore. We'll get into that as the program goes on. But I'm really delighted that we have such a crackerjack panelist, a group of panelists. 2 of them have earned Emmy Awards. They're all distinguished people in his or her field. Jonathan Alter, as you may know, in addition to being a Top Right magazine writer, is now writes a marvelous column called Old Goats for Substack. It's something I really enjoy reading, and I'm sure everybody else will. Jonathan is also the author of 3 books on the American presidency, the early days of FDR, the presidencies of Barack Obama, and also most recent book about Jimmy Carter. So delighted to have Jonathan with us. I think he's going to show up in a minute. There he is. Hi, Jonathan.
Hi.
Okay. Christine Romans is the chief business correspondent for CNN, my old stamping ground, and it was my pleasure to be a colleague of hers. Christine has won an Emmy Award and all kinds of other awards. She's also author of 3 books, so pleased to have her as well. And Caleb Silver is editor-in-chief of Investopedia, the immediate past president of Cebu, and has a distinguished background in financial journalism. So these are the 3 people who are joining us tonight, and they all have something special, I'm sure, to say about the subject of tonight, which is the midterms, Wall Street, and the White House. Jonathan, let me start with you. You know, you're the historian in the group. Give us a sense of what's happened over the years in midterm elections. Can you go all the way back to FDR and to the present?
Yeah, actually, I can, although I have to remind you that unlike you, I can't actually say that my life overlapped with his presidency, but um, I did write a book about him, and the 1934 midterms are one of only two such midterms, the other being in 2002, right after 9/11, where the first term of an incumbent president did not, that party, the party that controlled the White House, the first term did not suffer often a significant setback in the midterms. They almost always lose seats in either the House or the Senate or both. And that's why you keep hearing about these headwinds that the Democrats are facing. Now, some of them have been better than others. So, Jimmy Carter, interestingly, everybody thinks of him as a big loser, but the 1978 midterms, um, he fared pretty well, and the Democrats maintained control of both houses of Congress. They lost a few seats, but it wasn't a blowout. And in 1962, in the first midterms of the Kennedy administration, it was right after the Cuban Missile Crisis, and Kennedy lost a few seats in one chamber and did fine in the other. So, um, it's not ordained that it's going to be a blowout. And I've actually been writing since early this year that I think it's unlikely to be a blowout. I never believed the red wave theory because all of these rules are made to be broken. These historical precedents are made to be broken. And I thought the press kind of incorporated almost a historical determinism as if it was fated that somehow the Democrats were going to get wiped out. And I never believed it. That doesn't mean I think they're going to, hold the House. I think the odds are still pretty good that they'll lose the House. But I've thought for a long time that they would hold the Senate. And because the Senate breaks down to individual races, and it's much less about the overall national physics of politics. And the Republicans have a series of very weak Senate candidates, and a lot of them are going to lose. And then, the other, I think, big factor is that in all of these midterms that I mentioned that have been disastrous, over the last, 80 years, 80 plus years, um, it was always a referendum on the president. And in this very unusual situation, it may be more of a choice election than a referendum election. And so if the choice is between, Joe Biden voting against Joe Biden or voting against extremist MAGA Republicans, you're going to have a pretty significant number of people who, if they're voting against, it's going to be the extremist MAGA Republicans that they're voting against, and Trump's acolytes in particular. So if the Democrats can succeed in making it a choice election with the help of the Dobbs decision, they can make this very competitive. That doesn't mean that they're going to take the House, but I think even the House is going to be very close, likely to be closer than people expect. However, the polls are pretty useless. The American polling industry is in crisis. The response rates on polls are pathetic. The pollsters don't want to let you know what the poor response rates are and how unscientific their samples are, because that would be bad for their business. So the amount of attention that the press pays to the polls is all out of proportion to their accuracy. And all you have to do is look at how inaccurate they are. They were in 2020, which showed, big Biden leads in states that he won only narrowly. And they were often off by 6 points or more. And that's a tremendous amount in polling. So I would just urge everybody listening to pay less attention to the polls and maybe a little bit more attention to these issues, whether it's Dobbs or obviously inflation or the problems that Trump is having. And the final thing that I just want to say, which we can talk about more, and I'll stop rattling on, is I think that financial journalists need to understand the consequences for the economy of election deniers taking control in this election. And I don't think it's been well explained to readers that the American economy depends on the rule of law, depends on small d democratic stability. And once that goes, we are in a heap of trouble economically, set aside, what happens to us as a society and a democracy. But economically, we are in a huge amount of trouble if we're not seen as a reliable democracy anymore. And my daughter, I just want to do something nepotistic. My daughter, Charlotte Alter, who's a senior writer for Time Magazine, has a cover story that came out today about what she calls the defenders. These are people running for Secretary of State in various states who, are on the up and up. Some of them are Republicans, like Brad Raffensperger in Georgia. Most are Democrats, but they're running against election deniers in many states. And if the election deniers win, they believe it's heads we win, tails you lose. The only results they respect are those that favor Republicans. And if they get control of election machinery, it's curtains for democracy in this country. And I just would urge people to understand that this is in your bailiwick. It's a financial issue for the United States, and these are financial stakes that are involved, as well as small d democratic stakes.
Well, John, thanks for that. I want to get back to the last point a little bit later, but let me pose a question to Christine. Christine, you cover Wall Street very carefully. What has been the record of stocks in midterm elections or after midterm election?
I'm glad you, and I agree with Jonathan that, these are all historical patterns that get broken. They're meant to, be broken, of course. But when you look at a midterm election year, on balance, they don't perform as well as the year after, because you have the uncertainty out of the way, midterm elections are gone, and then you move on with business. So you tend to have a bigger gain the year after a midterm election. But for right now, there just are no precedents to what we're seeing, the attacks on democracy coming out of a pandemic. I keep telling the producers who work for me, all of our charts are broken. They're just broken. You look at jobs charts versus inflation chart. I mean, the pandemic has really just upended so many things that it's hard to stick to a historical precedent. But when you look at who takes over after, the best conditions for investors tend to be mixed government, not one whole party in charge of the whole shebang. Although over time, under Democratic presidents, you tend to have a better stock market return. But again, these are all historical precedents meant to be broken. And this is certainly one of those years. Already you've got stocks down substantially. Usually a midterm election year, on average, you have a 7% gain in the S&P. S&P is down something like 15% so far this year.
When you say that gain, up until the midterm or for the year as a whole?
For the year as a whole.
Uh-huh. Okay. And do you have any figure on what kind, again, saying that this is in a very unusual year, what kind of percentage gain? You say in general, the stock market is up the year after the midterm. And as Jonathan mentioned, there have only been two really uncharacteristic midterms. So what's the general progress of the market?
So since 1950, the midterm year is something like 7.5% gain in the S&P. Keep in mind, the S&P over time tends to go up. I mean, it is a very reliable investment. The year after, something like 15%. So the year after a midterm election, with all of that uncertainty out of the way, you tend to see stocks rise. It's just a very different scenario, though, as you know, Mike, right now. The interest rates rising so dramatically, and the Fed's aggressive stance here, and a narrower and narrower little band for a soft landing for the U.S. economy. I think that historical precedents are just out the window for this the next 18 months.
Caleb, you have your pulse on the market through the people that not only work for but access Investopedia. What are your comments about this crazy erratic market? Obviously been down in the last 4 weeks, but in general, what's investor sentiment like these days?
Great question. And I think it seems erratic. And when you look at the daily numbers of these 1%, 2% climbs, 3% drops, followed by a 4% drop, followed by a 3% climb, it feels that way. And we're getting periods like that. But if you actually peel it back, and I know you like to do this, Mike, it's been a pretty orderly decline that started, at the beginning of the year when the Fed started talking tough on interest rates and the dollar started gaining strength. The stock market and all risky assets, and that includes stocks and cryptocurrencies, all of them have been selling off because rates have been rising and the Fed's been getting more aggressive. Yes, it's a midterm election year and they're typically horrible. And the average correction during bad midterm years is something like 17%, which is kind of where we are right now. And to Christine's point, the bounce out of that's 14%. We may just get a bounce out of that because we're so low. But I think sentiment is sour, but nobody's panicking. And there's still a lot of passive money in the market and a lot of investors looking for opportunities to put money to work wherever they can get it. And now, for the first time in a very long time, there is no more TINA, right? There used to be just TINA. There is no alternative to stocks because rates were so low. You're finally getting money now out of the bank. You're finally getting a little bit of money out of government bonds right now, and you're going to get a little bit more. So sentiment is not as bad as it could be given the 17, 18% decline so far this year.
Well, there are some people who think that the decline in anticipation of higher interest rates, and tomorrow we're probably going to see another rise in interest rates by the Fed. That is baked in. That negative feeling, including today, is baked into the market already. Yeah. What's your view on that?
Could very well be. And when you get rates rising so quickly and that gap between interest rates, the prime rate, and where CPI is right now, and rates are going to keep rising until that equals out a little bit, you're going to get this big discount on stocks and their profitability going forward. Margins are going to get compressed. If we go into a slowdown or a recession, everything's going to drop and get compressed a little bit. So yes, we could already be seeing investors forecasting that through this discount in the stock market that we're seeing right now, that may be priced in. On the other hand, if we're in a bear market or we're going into one, the average decline is something like 30, 34%. We're kind of halfway there, and the average duration's like 300 days. To Christine's point, just because that's the way things were in the past doesn't mean they'll be that way now. Everything is happening much quicker these days. The recessions happen quicker, the corrections happen quicker, and the rebounds happen quicker. So everything's moving very quickly. And I could see stocks being down for a while, and then next year when things cool off a little bit, coming back up to the norm.
Well, we all know that the Fed is going to make an announcement tomorrow. Christine, it seems to me that the widespread expectation is another 0.75% increase by the Fed. There's a small minority that even thinks it would be a 1%, and there is an even smaller minority which thinks it'll be a 0.5%. Just hypothetically, I know we don't like to be hypothetical, but let's try it for a minute. What if the Fed only raises a 0.5%, and on the other side of the coin, what if they increase by a full percent? How do you think each of those would impact the market?
So I think 50 basis points won't happen. I think that 8.3% CPI number was just too hot, and the underlying spread of inflation to the food categories and elsewhere outside of gas is just too dangerous for them to take their foot off the brake at the moment. So I think 75 basis points is what they have telegraphed, and they're being very careful about that. I mean, I've been reading every word of the writers I know who have the ear of the Fed, just trying to make sure that there's still 75 basis points, and it looks like it's going to be. If it were a full point, that might really freak Wall Street out. That might send a signal to Wall Street that, wow, they're so scared about how far behind the curve they are. That could be a really destabilizing, I think, for the stock market. So I don't think that they would do that. But let's just step back for a second. 3 75 basis point rate hikes, assuming that's what happens tomorrow, in a row. That is unbelievable. And there was a 50 and a 25 before that. That's 5 rate hikes in a row. I first started covering the Fed and capital markets in 94 when they were in this rate tightening cycle. And this is putting that, to shame, really. They rose rates longer in 93 and 94, but not this quickly, this fast. So I think we also need to be patient and let this Fed medicine start to work, because it's a $20 trillion economy. So it doesn't move very quickly. But when all of that tightening starts coming in there and rolling off the balance sheet, hopefully the Fed does still have a path to a soft landing.
Well, Jonathan, there's a guy named Jay Powell who's the chairman of the Fed, and you go way back. Tell us about your feelings from what you know of what he may be doing.
So I've known Jay for 30 plus years. He married one of my closest friends from college, and my wife and I went to their wedding, and I've seen him not a lot. I wouldn't call him a good friend, but seen him fairly often in the year since, and I have immense respect for him. And I want to tell a story about him that amazes me, that it is rarely in the press. Maybe some of you have put it in your stories and I just haven't seen it. But the reason that Jay was appointed to the Fed in the first place is that in 2011, if you remember, and I have a chapter on this in the second book that I wrote about the Obama presidency. Remember, we faced the fiscal cliff, and there actually was a downgrade at one point, and you had a lot of Republicans on Capitol Hill who were playing like a James Dean game of chicken with the American economy. And they were saying, well, if we default, it's not that big of a deal. Literally, there were members of the GOP caucus who were saying this in the summer of 2011. And Jay, who had been in George H.W. Bush's Treasury Department and had been working for Carlyle and other places in the years since, he was in the private sector. And he called up Paul Ryan and he said, would you let me come and talk to the Republican caucus and just give them a little bit of a whiteboard, chalk talk about what actually happens if we go over this fiscal cliff? This would have been in late summer of 2011. And Ryan said yes. And he went in and he talked to the caucus and gave them, a lecture. And they kind of shut up and the crisis passed. And Obama noticed this and appointed him to the Fed. And so people think he was a Trump appointee because Trump made him chair. But he was really a Republican Obama appointee, and it was because Obama was so impressed by his patriotism at that moment of crisis. So he's just a man of great integrity. Whatever bogus aspersions Elizabeth Warren is casting on him, and I looked into those, and there's nothing to it, even though I am also, and I've known Elizabeth Warren for a very long time and have more respect for her than some people do. But in this case, she's completely barking up the wrong tree about him. So I think that the thing to understand about him is he really takes his cues from Volcker, who I interviewed 3 times in working on different books. And, Volcker told me that he thought Carter wasn't going to appoint him because he went in and said to him straight up, I'm going to be independent. I'm not going to do your bidding at all. And remember, in the 60s and much of the 70s, there were Fed chairs who Arthur Burns just did what Nixon wanted. William McChesney Martin did what Johnson wanted. So Volcker changed that and really established this idea of genuine independence. And Jay takes that very, very seriously. So he's not going to play politics with this. And even if, you think maybe he made a mistake a couple of years ago, whatever second guessing you want to do about him, he will approach this in a very, very independent way. That is his sincere commitment. And so anyway, I generally think that we should be very skeptical of our public officials and our politicians, but when they, when you do, integrity is in short supply now. And so when you see it, I think we need to take note of that as well.
Caleb, one of the big questions facing the Fed is whether it tightens too much and throws the economy into recession. What's the feeling about that?
I think that's entirely possible. And there's a lot of other things. Just the fear of recession can kick a recession into gear as people just pull back because everybody's talking about it. We have all these technical definitions of recessions. The NBER is the arbiter of that. They usually call them after they've already happened. But yeah, if you look at what's happening in the housing market with the demand destruction that's going on, with the 30-year above 6% and home sales falling for 7 straight months in a row and sentiment falling for 9 months in a row, you translate that to the rest of the economy, you could very easily have a recession because they're raising rates so aggressively sort of this late in the cycle to play catch up or to try to get on top of inflation that they can't get on top of. So that's entirely possible, and people are worried about it. And we look at what people are looking at on Investopedia as a proxy for their anxiety, because we have 20 million people coming through here every month to look up something. And what are they looking up? They're looking up what happens to their portfolios during a recession. They're looking at portfolio protection. They're looking at any bond ETFs they can get access to that are giving them some yield right now. They're looking for ways to protect their money and safeguard their personal finances. So recession is a big economic indicator, but it's also a very personal thing, just like real estate. Talk to a lot of people out there in America right now, especially small businesses. They'll tell you they've been in a recession since March of 2020, and everybody else has been enjoying this free ride. I think that's the feeling about recession right now across the country. Some people feel like they never got out of it, or they've been in one forever. And a lot of people feel like, oh, I'll be all right if it happens. But I think we are probably entering into a prolonged downturn. I just don't think it's going to be one of those 2-3 year deals.
Can I just add something there, Myron and Caleb?
Sure.
I think a technical recession at this point would be less painful than entrenched super high inflation and the damage that would do, which would be more structural than cyclical, right? So I'm really worried about them getting that inflation under control. I mean, it's almost like we have 2 bad choices here. To cure the illness that is the inflation, we have to take this medicine that could make us even sicker in the near term. I think it's such a terrible position that Jay Powell is in, and the Fed at this point. But I look at how strong the job market is. Every week, the fact that on CNN every week we do weekly jobless claims, Caleb, that never would have happened.
That's a big deal.
Worked there together. I mean, that's the kind of thing that you and I would love, and our editors would be like, "Oh God, no, that's never going on TV." That goes on TV every week now, and those numbers are so low. I mean, there just aren't layoffs other than the one-offs here or there, or things that are related to housing or fintech. So there are other parts of this economy that remain strong, and the consumer is still spending. Balance sheets are way better than they were in 2008. So while there is a lot of recession talk, I'm hopeful that people are in a better position. And the bigger problem, I think, is the inflation.
Yeah, and it's different this time. That's, as you said earlier, it's just different. None of those things make sense anymore.
Yeah. Just one other point about Jay Powell and his respect for Volcker. So, as I think many of you know, interest rates hit 19% in 1980, and then when Reagan became president, there was a recession in 1982, but it was very short, very steep, and when they came out of it, there was no inflation. So, Volcker was going to apply that medicine in order, as Christine said, because he thought, as you just mentioned, that entrenched inflation was worse than a short, steep recession. And I think Jay Powell feels the same way.
Yeah, he said the word pain twice in that speech last week. And I think pain for U.S. households. And I think that was on purpose. I think that was sort of to let everyone know that it's not going to be easy, but that they're going to see it through. So there'll be, he'll be in the history books for sure.
Christine, let me follow that up with you for a moment. The Democrats, of course, are delighted that gasoline prices have come down pretty quickly. I mean, they went up very fast, but they're coming down fast. So they like to point that out. Do you think that's important?
I do. And here's why. That gas, when we were watching those gas prices rise to above $5 a gallon, and I would point out that those are nominal record highs in gas. They're not inflation adjusted. You have to be $5.50 or higher for inflation adjusted records, to match the 2008 financial crisis. But people feel that number more than it actually affects their budget. I mean, your share of gasoline to your household budget today is less than it was in 2008, and it's a fraction of what it was in the bad old days of the 1970s, of course. But it still is that psychological number that bothers people. And now that it has been coming down, I think that is a real relief for folks. I also think that the Republicans, and I'm a little shocked by this, they have not been able to stay on message on the overall inflation story. They've tried and then they've faltered. Lindsey Graham sponsors a 15-week abortion bill on the very day that you had a terrible CPI number. I don't know why they haven't been able to play that card if they were going to stay on message for that card for the midterms. 6 months ago, Myron, I would have told you they're going to ride inflation to a red sweep in November. And they have not been able to really stay on that message. And I think the falling gas prices are an advantage to the Democrats and a disadvantage to the Republicans.
Yeah, to Christine's point, if I may, she's right. Gas spending is a very much smaller part of the household budgets, but you see it every single day when you go down the street, when you get on the highway. A 5 in front of that number is a very big deal. A 4 or a 3 is much more tolerable. Out in California, it's 5, 6, and it'll be that way forever. But it's psychological, and that gets in people's heads. And the media, guilty as charged, we put it up on screens all day long too, because that's the thing in your face. Just like we put the stock market in your face and the Dow Jones Industrials, when no one's really invested in the Dow Jones Industrials. Well, people are, but you get my point. These are the flashy, sexy numbers that the media uses and that politicians also use to get people's attention. And it's psychological, but underlying all of that is a whole lot of other things.
Caleb, let me ask you, since I mentioned you had the finger on the pulse, do you hear anything about Roe v. Wade? Does that affect anybody's investment or political thinking?
No, it affects their political donations. It affects where they give their money or where they don't give their money more than anything. But if you look at the 6 or 7 issues, I was looking at Morning Consult and 538 earlier, the things that people care about the most, it's the economy, stupid. Again, always above Roe v. Wade, above Russia and Ukraine, above COVID, above President Biden's popularity. It's the economy, and it always has been.
That's true, Myron. But the thing that people have to understand is that midterms are about turnout. So there could be a lot of people who say, yes, of course, inflation is the most important thing to me, but they're not terribly motivated to vote. So if the turnout numbers resemble 2018, the Republicans have a problem. If they resemble 2014, then the Democrats have a problem. And the big difference between the 2014 and the 2018 midterms was youth voting, 18 to 30. and it was way down in 2014, and that was, disastrous for Obama's second term. If not disastrous, it was harmful. And it was up, double digits by 2018. So there are some indications that the abortion issue is creating turnout intensity. It has shrunk the enthusiasm gap, which favored the Republicans. And it's now pretty even, but people's sense is that it's trending toward the Democrats. And one of the interesting things is it's particularly conspicuous among younger voters who have been very alienated from Joe Biden. They really don't have a lot of use for him. He was fine to get rid of Trump, but they don't relate to him. And they, he's not popular. He's less popular with younger voters. But, and this is something that people don't understand, not just women voters, but young male voters are motivated by the Dobbs decision. They don't want to pay for a baby because birth control didn't work. This is a powerful, powerful issue. And we don't know exactly how powerful, but there's some signs that, if you look at, there have been, forget the polls for a second, we've had 4 recent special elections, and the Democrats have done better than expected in all 4 of them. You probably followed Sarah Palin getting her ass kicked in Alaska when nobody expected it. I wouldn't be. I'm not minimizing inflation at all. It's historically it's an enormously potent political issue, arguably more than unemployment, because it affects everybody and unemployment doesn't affect everybody. But there is this other issue this time. And then there's a third issue, which is at the beginning of the year, even the most partisan Democratic pollsters thought that democracy was an abstraction. Nobody's going to vote on that. And there's new polling that shows that like close to 70% consider it a big issue, and so there's a sense that Republicans have just gotten too extreme in denying the 2020 election, and that could have some impact at the polls.
Christine, in your early morning show, you deal not only with business and finance, but the political scene as well. There's a big elephant in the room that has been mentioned a little bit. How much do you think Trump's impact on the midterm will be?
I don't know, to be honest. I've been trying to watch some of his rallies just to see what the language is that he's using and the mood, just to see this. There is still, I'm from Iowa. I'm from the Midwest. There's still a lot of energy behind him. There are still a lot of people, even people, in my family who are like, burn it all down and start over Trumpers. And I don't know if they're going to vote. I don't know if they're midterm voters or if they're general election voters. And I think that's going to be really interesting to see. But I do sense that there still is a lot of energy behind him. I can only speak for the Midwest, but there's still a lot of energy behind him in the Midwest.
What are you hearing, Caleb?
Yeah, I think Christine's right. Not on the sides, on the brackets, but through the middle of the country, Trump is still very popular. I was recently in Ohio, and that's basically all you see in terms of political support and support for Republican candidates. That's just Ohio. That's just a snapshot, but that's not so far away, and it's a pretty important state. So I think there's a lot of support there. It's just hard to know. I don't follow the political scene as closely as others do, but my sense is I would never underestimate him or his followers.
Well, I wouldn't underestimate them, Mike, but let's just talk about Ohio for a second. So the only reason J.D. Vance has any money at all is Peter Thiel has been giving him a fair amount. His donations from Ohio Republicans are pathetic. So as a kind of a proxy for energy, it's not transferring from Trump to J.D. Vance. And Tim Ryan is running a very strong campaign and appealing to the non-college educated voter. I'm not saying Tim Ryan is going to win because the state has been trending Republican, so I wouldn't hazard a guess, but he's within the margin of error in most polls, and Sherrod Brown, has consistently won there with a message that's very similar to Tim Ryan's, and so there's this question about Trump of whether the energy that he creates is transferable. It was not in 2018 when he wasn't on the ballot. He got thrashed in those midterms. So again, if it becomes a choice election, the Republicans have bigger problems than if it's a referendum election. And we just don't know yet which it's going to be.
The third aspect of our session tonight is the White House. So, Christine, I'm going to throw the hot potato to you. Let's go past the midterms, and now we're facing a presidential election in 2024. There are two big ifs. If Trump is around, then will he run? And if he is, will he run? And the second one is one that President Biden even alluded to, that he might not run. He didn't say he wasn't going to run. He said it's his intention to run, but it's not certain. My feeling, just to express that my feeling is that Biden is doing the right thing. The last thing he should do is announce that he's not going to run. If that's what eventually he decides to do, he'd be a lame duck way in advance. And secondly, if he does come out and say he is going to run, then he's circumscribed by certain either legal or other considerations that would not be in his behalf. So let's take. I keep throwing hypotheticals at you, Christine. I apologize for that, but let's assume the Democrats keep the Senate and lose the House narrowly. And if I had money, if I had to bet some money, I would bet that's what's going to happen. Right. Not necessarily, but possibly. Okay. So we got a Republican House, but not by very much, and a Democratic Senate. Who runs in 24?
Oh, wow. Well, so first of all, Myron, before you can get to your hypothetical midterm result, the White House has got to sell what they've already achieved. I mean, the PACT Act and the CHIPS Act and the Inflation Reduction Act, which is called inflation reduction but doesn't actually reduce inflation. They've got to do a better job of staying on their message of what they're doing. I think the president fumbled a little bit in that 60 Minutes interview when he said, where he seemed to minimize how bad the inflation was. And he was being presidential, to be honest. He was being a cheerleader. When Donald Trump would cheerlead about something bad happening in the economy, he looked strong. Biden, people thought he looked tone deaf. It's just a different kind of politician. But I think there's a lot that they can try to sell that could be good for Joe Biden if he wants to run again in 2024. A lot has happened, and a lot of it people haven't felt yet. I mean, those caps on drug prices for senior citizens, they're really going to start to notice that in family budgets next year. I mean, so there are some of these things that haven't been felt yet that I think the White House could do a better job trying to sell.
Caleb, your finger on the pulse again. What's your feeling about the sentiment of the electorate once the midterms are over and we're going into another presidential election?
I think the economy is going to dictate a lot. I think people do really vote that way. We do have a very polarized country right now. If you look at polls of polls, it's pretty split down the middle, just like it was during the last couple of elections. So it's polarized. But I like what Jonathan says. If it's about choice, then I think, advantage Democrats. I think I'm an independent, but that's what I think. And if it's a referendum, it's always a advantage the other party. So I don't, we don't know who's going to be running at this point. So it's all speculative. There are some people out there that have very big platforms that have created some very big platforms for themselves over the last few years, including somebody in Texas. So you may see somebody like that come out, but if nobody has a really strong agenda for lifting the economy, and I don't just mean for the shareholder class and the wealthy class, but for everyone, I think it's going to be very tough for them to win the White House.
Well, Jonathan, to throw one at you, the irony of bussing up those potential immigrants to the U.S. By the governors of Florida and Texas has raised a lot of questions on both sides. What's interesting to me is I can't remember who said it. They said, boy, we welcome the influx of those people because we have jobs that can't be filled by Americans. And that's really the amazingly low unemployment rate. So factor that into what you've seen over the recent history.
Well, there was one Venezuelan who arrived in Washington, D.C. recently with, by his account, not a penny in his pocket. And he camped out across from Union Station, and then he was taken to a shelter. And it's now, I think it's 5 weeks later, and he says he's been making $800 to $900 a week, and that he has many, many job opportunities, and he's thrilled, and he's, about to buy a used car, and he's on his way, So there are all these jobs, and I do think the press undercovers that story. And then also, with, like, I turned 65 in a couple of weeks. I'm born at the height of the baby boom, and I'm not retiring, but an awful lot of people who are a few years older have retired. And so, that's a part of the workforce that I think is not factored in enough to the coverage, that this huge cohort of boomers have retired, and their jobs are, in many cases waiting for people. But in terms of immigration, I saw what DeSantis did as positioning for 2024. He's going to very likely run against Trump, and they're going to have a very bloody primary fight. And I wouldn't hazard a guess as to what's going to happen. There are too many variables. But it was also a sign that they're trying to go to the well on immigration, which is an issue that's worked for them very well in the past, and maybe a sign that they think inflation is not going to get them over the finish line in the midterm. So they want immigration. But something that hasn't been pointed out very much is in the 2018 midterms, which, as I mentioned, were very bad for Republicans, they closed on migrant caravans between Labor Day and Election Day 2018. The Republican Party was very disciplined in focusing on the threat from these migrant caravans. Everybody's forgotten about it. And they have a history of trying to close on one issue. It worked for them in 2014 when they closed on Ebola, if you can believe it. And they picked up a lot of seats just on that one issue, scaring everybody about Obama not responding properly on Ebola. If this is a kind of a change in their strategy to try to close on immigration, and I think they're making a mistake, because they love to own the libs, and that's what this Martha's Vineyard thing is about. But sometimes owning the libs is not really the way to win elections, and so we'll see. But now a lot of DeSantis's story is coming apart, and it turns out they lied to these migrants. They promised them all kinds of things. There's a brochure that surfaced yesterday that was distributed to them, was full of lies, and we're going to find out how much DeSantis knew about it. So I'm not sure that it's going to be quite the winner that it is for him when he goes to Republican fundraisers.
You know, John, you say you're going to be 65 and you're not going to retire. I retired 17 years ago on my 75th birthday, and I didn't have to retire, but I decided to do it, and I was still enjoying what I was doing. That's not so much true anymore of people enjoying what they're doing. We talk about quiet quitting, right? This is a whole, now I'm a depression baby, not a baby boomer. And the idea of slacking on the job, and especially coming from immigrant parents, is beyond the ken. However, this new generation, it comes from a different place. Caleb, I'll throw this at you because Christine has had all the hypotheticals up to now. What about this whole idea of how late in life people want to work? And right now, there's jobs for everybody who wants to work, just about, right? And people are not loath to change jobs if they don't like the job or they don't like their bosses or whatever, because they can find another one. A few years ago, that was not true. And what about this whole, it's really a demographic question. What have you been discerning?
Yeah, I see it in my own newsroom and across our company. People are willing to go for a better opportunity, more flexibility, a little bit higher pay, a little less hassle, and they can, and it's super competitive out there. And you don't need a 4-year liberal arts degree at a $85,000 a year college to get one of these jobs that's going to continue to pay you year after year, or get to be in a competitive place in the workforce today. That's today. It's not always that way. In terms of older workers, I think people want to work longer, and I think people have to work longer in large part. So they are, and they can. But I also think that the notion of retirement that I grew up with, and you guys have grown up with as well, that we see on the Golf Channel, with a guy that looks a lot like me, with a beautiful family and a dog running around the beach, playing Frisbee with his grandkids. That's very different as well. This notion of working to that place where I have enough for that, I think that's out of reach for so many people right now, except the people that watch the Golf Channel. So I think people are being kind of forced to continue to work longer. I don't think a lot of people are prepared enough for what it really costs to retire. And what I mean by retire is to be able to afford your own time to do what you want to do, plus the health benefits that go with it. So we're seeing people stay in the workforce longer. We're seeing a lot of job mobility and a lot of jolts, if you will, in younger workers, because they can and will go to the next best thing, or the thing that allows them the lifestyle they want at same or just smaller pay.
I think we're going to see more strike action too. I really do. I think this railway strike and the teachers and the nurses, people are exhausted, and there are a lot of fine people with with degrees working in nursing and in education who've been disrespected, not only by the trials and tribulations of the pandemic, but now by the politics on the other side, where teachers are being told by random parents who know nothing about the curriculum or even what books are in their library. They're being called anti-American. So I do think there's an exhaustion that you can see in the polls, and I think it's also, when you look at these terrible economy polls, I think part of it is an exhaustion in the workforce. I really do.
Christine, an extension of what you just said, what about inequality? The studies show that most Americans have no money in the bank, very little savings. Despite all your good work, Caleb, they don't have enough investments. So you made a picture of people on golf courses, but the ordinary worker, particularly in the service trades, is living hand to mouth. Christine, what do we do with them?
So those are some of the workers who are the more reluctant to come back. They're also less likely to have childcare. We have a shortage of childcare workers in this country. I could go on and on about this forever, but when times are good, the rich get richer. When times are bad, the rich get richer. And income inequality is just entrenched in in the economy. Build Back Better was meant to try to address some of that by getting permanent child tax credits to families, by having universal pre-K, by having all of these things that could have let those frontline workers have a little bit more of a safety net, but only bits and pieces of that actually got through. Ironically, the opponent said it was all inflationary to be throwing that much money into the economy, but those are the people you're trying to get back to work to make the economy whole again. So it's still kind of a really broken system.
So can I just say something about this? Because I strongly support what you just said. There's this assumption that you see in a lot of reporting that it's government spending that is causing this inflation, and it ignores two critical factors. One is that Biden has sharply reduced the deficit by hundreds of billions of dollars. Slight detail, right? You almost never see that mentioned. So much for that part of the argument. And the other is that inflation is really bad in other countries.
Yeah.
So it's obviously, much more connected to energy prices and, supply disruptions because of the Ukraine war and problems with Iran. And, it's so often it comes back to energy as the root of inflation. And I also think people don't understand that among the stakes in this election are what you were just talking about, Christine, that if the Democrats shock the world and hold the House and the Senate and have more than a 50 seat margin in 50 seats in the Senate, if they don't have to worry about Joe Manchin anymore, which is quite possible, by the way, they will return to this pro-worker agenda that does address income inequality on things like the minimum wage, child tax credits, and a series of other things that could dent this problem. It won't end income inequality, but it could start to move things sharply in a different direction and lead to a really historic second half of Biden's term if this shocking result, which is possible, were to take place. And I think it hasn't been teed up properly for voters, and there's a lack of knowledge, not just about which candidates support exceptions in the case of rape and incest, but also which candidates want to invest in childcare. And we kind of assume that all of our readers and viewers know this, but a lot of times they don't know it, and they need to be reminded at election time of what the respective priorities are for the different parties. I mean, for instance, I don't have any idea how. I would genuinely want to know, what would the Republicans do about inflation if they got power? What is their inflation fighting program? I'd love to see a story that told me, what it was. Is it Rick Scott, who's the head of the Republican Senatorial Campaign Committee? Is it his platform, which Mitch McConnell has been kind of running away from? What is it? So I really think in the next couple months, we all have a responsibility to do voter guides and segments on our programs that just give you really basic information about what each party represents.
You mentioned a word that hadn't been said up to now, and that's the media. Caleb, some people felt, particularly in the 2016 election, that the media dropped the ball. And they haven't done very much better since. And now media, is all over the lot. But in general, are the American people being well served by what the media is showing and giving them right now?
Yeah, Mike, it depends on really what you mean by media, because, I worked in cable news for a long time and we think everybody watches that. The reality is not a lot of people watch that, relatively speaking. A lot of people are getting their information from their social media platforms, whether it's TikTok, Facebook, Insta, Snap, Twitter, whatever. Is that the media now, or is that just the messenger? So if we're talking about the cable news world and the financial cable news world and even the broadcast networks, it's still a very small amount of people at a very high age bracket that are watching that, to be candid. So I think a lot of, who's responsible, if you're looking at that world, we could all be doing a better job. And did we miss it? Or I was part of that world up until 2014. When we get an election wrong or something goes the other way, did we miss it, or did we misinform, or were we cheerleading one way or the other? I think that absolutely happens in all cases on both sides of the spectrum. But the nature of media and the way people get their information is so different today than it was in 2016. And 2016 was much different than 2014 and 2012 and 2008. It keeps changing, but the medium is the message right now. And so whatever media you want is what you're getting.
This is the first TikTok election, I think. My kids, when they ask me something political, it's something that Trevor Noah has touched on that they saw on a 30-second TikTok reel, and there are a lot of grownups. I just saw a stat today that an unprecedented share of grownups, or their primary news source now is what's on their TikTok feed or on their Instagram feed. And guess what? A lot of that stuff is complete and utter bullshit. You probably heard what Rand calls truth decay, a real thing that they look at around the world. And the US has a very bad case of truth decay. Yeah. And this will be, I think, really the first midterms where it's delivered on your phone. It's not real. It's bullshit, and people can vote on it.
Okay, the discussion has been so good, and we're getting close to the end, but I forgot to mention that we encourage questions from our viewers and listeners. You can put a question on your chat, and definitely we'll look at it. Try not to cover anything that's been covered already, but if you have any questions, go to it on our chat forum. Now, I have to ask Jonathan I want to ask Christine. Christine, you're the youngest one here, but you have kids who are in the next generation of voters.
Yeah.
And you mentioned the difference that that they approach the whole thing. Is that, and there's so much disinformation there. How do we as parents, grandparents, tell the younger generation that watch out for disinformation?
It's interesting. To be honest, I think they're the ones that are telling my parents to watch out for the misinformation. They've grown up in this sea of stuff, and they kind of have a sense with what's funny and what is satire and what is real. Right. So they're pretty tuned in. They also are the children of two journalists, and they listen to our global calls. And so they probably know they're not the average, kid in that way. But they are really motivated by school shootings and by climate change and immigration more recently. These are things that their friends also talk about. And I hear them when I'm taking them back and forth from soccer practice, like we're driving to the park, and the boys in the back seat are talking about, what they can do, and then how it's pointless for a consumer to change their behavior. It has to be corporations, and it's like, whoa, So those are the things that they're really in tune to.
Caleb, you have kids too.
Yeah, same thing. Same things get to them. There are two young ladies, and they're very worked up over, Roe Wade. Immigration gets to them. They see pictures and stories about children and families, and that gets to them. The economy is not on their mind right now. They're not thinking about that at all. They're watching, crazy things happening in the world, caught on social media, and then amplified by those platforms and made even crazier by the memes that come out of them. It's like derivative news products for them that they get through the social media, but they have a pretty complicated understanding of it as well. I talk to my daughter all the time. I'm telling her a story. I was talking to her about, the woman that created Theranos. And she already knew more about it than I did, not by watching the movie or reading the book, but by listening to somebody talk about the movie in about 10 minutes. She knew much more about her Elizabeth Holmes than I ever did.
That's funny.
You know,
So-
we only mention a key word once, and that's climate change. And talking about our children and grandchildren, they're going to live with climate change if they're still alive when they reach our age. Uh, what about that? Anybody have a comment?
So can I want to address that in the same answer to a question that Peter Coy asked in the chat, which is, he says that he agrees that polls aren't perfect, but doesn't it make sense to pay attention to them because there's nothing better? And so even though I criticized polls early in the conversation, I'm a polling junkie. I read them all. All I'm suggesting is that the ratio of coverage of polls to something like climate change be adjusted. That doesn't mean you don't ever write about polls. If there's a good, reliable poll with a big sample size, and that you believe is something more than just, horse race, sort of silly horse race coverage, of course it should be covered. But right now, it's polls, but not climate change. I mean, do people even know what the positions of the two parties are on climate change? I think a lot of people they sort of vaguely understand that Trump didn't care about it as much as, John Kerry and Barack Obama and Joe Biden, but they don't, nobody has told them that if they live in Pennsylvania, that one candidate for the Senate believes X on climate change and the other believes Y. And it doesn't take that long to kind of take your viewers through some of these things so that if they are watching you instead of just getting all their news from TikTok, they might have a chance. And then, by the way, some of what ends up on social media starts on cable news or places that maybe don't have as many viewers as all of us who are in cable news would like. And the conversation has to start someplace, and often social media is kind of the end point of the conversation and the direct connection to news consumers. But you still can move the needle and frame the debate. A lot of this is framing, and so, I mean, as I mentioned before, I think democracy has to be part of the framing, that this isn't really Democrats versus Republicans. It's people who believe that when you lose an election, you concede, and people who don't, and that's a framing on this that's accurate but relatively rare to see.
Okay, to move away from all these other subjects, there's one subject that one of our viewers says we got to talk about, and that's crypto. Crypto. Okay. Christine, tell us all about it.
Oh, can I just tell you, crypto has been a burr in my saddle for about 4 years now. When CNBC put it on the little ticker, I felt like Uber drivers and my cousins were like, which one should I get? And I kept saying, it doesn't store any value. It's not a hedge against inflation. It's a purely speculative vehicle. And then when my neighbor went for the first time to have a financial plan drawn up for her and her husband and getting their kids ready for college, and the financial planner actually said 5 to 10% of your portfolio should be in crypto, I almost lost my mind, because there's so many regulated and valuable investment tools. And I've spent my career trying to get people to save their money and grow their money in a safe, responsible way. And I think crypto has become, there is real blockchain technology that is going to change the world, no question. But for most people who ask me about crypto, they think of it as a get rich quick scheme or some kind of fancy penny stock that they want to buy. Caleb, maybe you're more crypto savvy than I am, but I am definitely like, I'm 100 years old in my view. I am a Warren Buffett and Charlie Munger on crypto.
Right. I agree with you on the technology, and blockchain technology is going to revolutionize or at least change a lot of industries for the better. I think that's a good thing. And the crypto tokens, the coins, the Doges of the world, these are the cars on the highway, the flashy cars and the prototypes that aren't backed by anything. So they're extremely speculative. That said, in the past 10 years, the S&P 500 is up about 250, 240%. Bitcoin is up 500,000% in the past 10 years. So speculative or not, there are some people, and there are very few people that have made a lot of money at it, and that makes it very difficult for the FOMO crowd, and the FOMO crowd is everyone else that missed it, which is why your aunt, uncle, cousins, nephews, nieces, and Uber drivers were asking you what coins to buy, and they still will the next time crypto has a big bump. It's a speculative asset. But when you have all speculative and risky assets on the back burner right now, then crypto is not even in the kitchen. And that's what's happening to cryptocurrency right now. Any real investors who had thought about it are really not thinking about it right now, except those people that hold it near and dear, the hodlers and the original, whales that are in it. What I think is crazy and what really jumped the shark was when Fidelity said we're going to make it available in 401k plans. That's fine. And I believe in it. And I think we'll be talking about Bitcoin in 10 years and it'll still be around. But I don't know if it's going to be 100,000, 10,000, $2 or 50 cents. But the fact that it is, we have the biggest institutions in the world that are going to make it available to retirees, MasterCard and Visa transacting in it, Square and all these other companies making it a part of their ecosystem. It tells you it's going to be here. The speculative part of it drives me crazy too, because it creates this casino-like mentality in investing. Yeah. That's the worst thing you could possibly have.
I just don't want, I don't want individual investors to get hurt. That's my big thing. It's just not my lane.
Okay, Jonathan, on that subject, here we have somebody that says stay away and somebody that says be careful. It's very speculative, but you could make a lot of money on it and the big institutions are coming in. Jonathan, I don't think you've written on this subject, but give us your neutral opinion.
Well, I mean, I'm very interested in the subject. I have a nephew who's big in it. And just to be in the interest of full disclosure, my extremely minor investment, extremely small percentage of my portfolio is in basically a crypto mutual fund. So I think there are ways of, lessening your crypto exposure, and actually it's not down that much, this mutual fund. So I think it is part of the future, but what is just looking at it on a historical continuum, ultimately for it not to be a speculative bubble, it has to meet a real need. And right now, I agree with Paul Krugman that I'm not seeing the real need that it's filling, except for, drug dealers and people engaged in the, subterranean economy. And I know that, people will say, well, no, it's good for X, Y, and Z. But, I think again, in the interest of full disclosure, I have a little device on my house that's supposed to be, it's in crypto for the Internet of Things, like your smart refrigerator. There's not the bandwidth for that. And so there are companies that use crypto to increase bandwidth. And that's a valid use of crypto. But the New York Times, when it wrote about this, said it was the only real need that they saw that crypto is meeting is in the Internet of Things. And so, I think that as time goes on, there will be other uses for it, but they are taking a surprisingly long time to present themselves. I would have expected that, within the last 5 years, there would have been more things that you could explain to a civilian that crypto was good for. And we haven't seen that. In the meantime, abroad, there was a period about 6 or 7 years ago where you could pay for consumer items with crypto. And that hasn't really grown very much because they found that it wasn't as useful as conventional currency. And what is it, El Salvador, that was converting its economy, to crypto, and they've now pulled back from that. It didn't work for them. So
Okay,
I would be careful.
I think the word careful is well advised. We're going to wind up right now. This has been an amazing conversation, but I'd like to hear from each of our panelists one comment that you want to make about the present, the past, or the future. We'll start with Caleb.
Well, I will say that it's an honor to be anywhere where you want us to be, Mike. You are really set the standard for great financial journalism. You paved the way for so many of us. So I'm just honored to be here with you and spend time with you. Any chance I get to do that, I will do that. So thank you for having me. And this is super esteemed company for me to be in. I got imposter syndrome all over the place, even though I have the best background. So thank you for having me. And I will say that, I'm in a unique position because, my job is to explain money to the world, to people through Investopedia and through our platforms and through our reach. So I have learned so much watching all of you, reading all of you, and that sort of informed the way that I try to do things. So I'm going to keep trying to do that. As for the people that are listening and tuning in, the election is not going to make or break your portfolio. Stay invested. We say the best day to start investing was yesterday. The next best day is today. And if you can't do it today, please start tomorrow. So stay invested in something and build your wealth over the long term. But thank you again for having me.
Christine.
Oh, Mike, well, it's been great to spend an hour with you. I haven't done that in a long time. So it's nice to be here with you and answer your very smart questions, maybe dodge some of your very smart questions. I would just say on the present that, especially for financial journalists, there's so much conflicting information right now about the state of the economy. We just don't know what's going to happen. Somebody talked about, I think it was Jonathan talked about, there's just too many variables. There are so many variables right now. There are a dozen different cross currents in the global economy that any one of them would be my lead, my headline, day in, day out. And there's a dozen of them, so whether it's the war in Ukraine, whether it's inflation, whether it's all of this legislation that has happened most recently, whether it's, the supply chains, all of this stuff is just epic. So all of you who are writing about this and asking questions about this, I think we just have to be incredibly careful about not putting too much weight on one piece of data or something. It's just unprecedented where we are right now.
Okay, Jonathan.
I think that's a great point. I've learned so much from Christine and Caleb and Mike. You talked about past, present, and future. You are a champion in all three. And if I can, be even a fraction as insightful when I'm, 10 years younger than you are now, I'll be happy. So you're an inspiration to me, and I know to my wife, Emily, who's very fond of you as well. And I would just sort of reinforce Christine's point. If somebody tells you that they know what's going to happen in the stock market or in an election, don't believe them. They're basically bullshit artists. We've gotten as an industry too much into the prediction game and not enough into the analysis of what's happened in the past and to try to explain that to people or explain what's happening in the present. And so I think, a certain humility about where things are going, but also, and this is something that I think we'll look back on, is that we are in a democracy crisis right now. And the next, few years are going to determine what kind of country we have and whether, for the first time in American history, we had a president who didn't respect the peaceful transfer of power, which is the central element of our democracy. It's what separates us from undemocratic societies. And so if we just keep heading in that direction, it's not only horrible for us as a society, but like even the safest investment won't be safe because you will have a capital flight like you won't believe. Now you might say, well, China, they do pretty well, but that's not, it's not going to work for us. Our strength is our democracy. So I would just leave people with that. And I hope that people present that to their readers, not as a biased, appraisal, but just as a straightforward assessment of what the stakes are in this election.
Jonathan, well said. Peter, I'm going to turn it over to you, Peter. And sidestepping all the praise, I'm really embarrassed by all of it. Wish my mother were here to hear it. But Peter, I want to tell you that you as president of the New York Financial Writers have been doing an amazingly terrific job. Keep at it. Thank you all very much. And thank our panelists for an amazing discussion.
Thank you.
And Myron, thanks to you. I'm really glad we put this panel together. You put this panel together and it came out really well. Thanks to Caleb, Christine, and Jonathan, to Britt, and to the audience members who stuck with us and asked interesting questions. Great session and good night, everybody.